Welcome to all of you. Myself E. Kalichalvi, Assistant Professor, Department of Commerce. Today, now I am going to talk about Week 3 Lecture 4, Departmental Accounting, Interdepartmental Transfer at Cost Price, Meaning, and some also included in this unit. Meaning, goods may be transferred from one department to another. Similarly, service of one department may be used by another department. In such cases, the transfer may be made at cost price or at usual selling price. For the department which received the transfer, it is like a purchase or furnitures expenditures also. The trading accounting of the receiving department is debited with the value of the transfer. For the department which makes the transfer, it is like a sale on income. The trading account of transferring department must be credited with the amount of transfer. No further adjustment is required to relation to the transfer. That is the problem. A hotel proprietor has two department-wise, apartment department and meals department. So, two departments are included. One is apartment, second is meals department. Following is the trial balance of his business. Debit or credit, both the sides are included. Value also mentioned. Provision value is 15,500. Stock of provision in the beginning 1,020. Cash in hand at bank 10,000. Customer debit balance 800. Building 1/10 used for meals department 2,10,000. Furnitures and equipment 60,000. In credit side of the particular, we will discuss about income from apartment and attendance department 46,000, income from meals department 32,000, capital 2,20,000, supplier account 9,800, provision for depreciation and building 24,000, interest value is 1,130. Debit and credit side the value are mentioned. General expenses 27,410, interest occurred 200, life insurance 1,600, income tax value 400, wages value 6,000. So debit and credits and the values 3,32,930. That is the questions. Additional information also included in this problem. A. The servant in the apartment department has occupied a room worth rupees 120 and took meals worth rupees 60. Similarly, servant in the meal department had occupied a room worth rupees 150 and took meals worth rupees 90. B. Wages are charged in the proportion of 1/2 to the apartment value, 1/4 to the provision department and remaining to the general PL and account. C. Adjustment is increase provision for depreciation of building to rupees 30,000. D. A sum of rupees 800 representing accommodation rupees 240 and meals 5,060 to be charged to be proprietor of a hotel. So you are required to prepare profit and loss account and balance sheet as on 31st/3/1992. That is the working notes. In this working notes, two departments are separated, apartment department and meals department. So expenses on servant in the apartment department values 120, meals department 60. Expenses on servant in meals department 150, meals department 90. So 180 for apartment or department, 240 for meals department. So the total income is 270 in apartment, 150 is meals department. So that is the departmental profit and loss account for the year ending 31st/3/1992. In this problem, profit and loss account, all the expenses, all the revenue mentioned in the both the department. To stock, no value in apartment, 1,120 in meals department. To provision, no value, 15,500 in meals department already mentioned. To depreciation on building 5,400 in meals department 600. To wages value is 3,000, meals department already included 1,500. To inter-department adjustment is 180 in apartment, 240 in meals. So in credit side, by income 46,000 in apartment value, meals value is 32,000. By proprietor account drawings, drawing means some value you have to use in personal or other. So the proprietor account drawing is 240 in apartment, meals is 560. By inter-department adjustment 270 in apartment, 150 in meals. So the value is 46,510 is the apartment value, 32,720 in meals value. So the difference is, that is the net profit. So the difference is apartment value is 37,930, 13,850, that is the difference in meals department net profit. So both the department of net profit is 37,930, 13,850. So general profit and loss account. To wages 1,500, to general expenses 27,410, net profit carried out 24,000. By net profit brought down, apartment value is 37,930, meals value is 13,850. Before starting the profit and loss account, brought down the value of net profit. So the net profit value is mentioned 37,930 calculated in the last profit and loss account. So meals value is 13,850. By interest 1,130. So both the value is 52,910. So 52,910, that is the total value of credit side. The difference is 24,000, that is the net profit carried out. That is the balance sheet of apartment and meals department balance sheet as on 31st/3/92. Liability side, asset side, all the revenue, all the liabilities, all the responsibility you should mention in the liability side. All the assets you have to mention in the credit side. So liability side, capital 2,20,000 less drawing. These are the category included in the drawing side: income tax, premium, meals, apartment. So 400 income tax, premium 1,600, meals 560, apartment value is 240. Add net profit. Net profit value is 24,000. So capital minus drawing plus add net profit. The value is 2,41,200. Suppliers 9,800. Provision for depreciation 30,000. In asset side, building value is 2,10,000. Furnitures and equipment 60,000. Customer account 800. Interest accrued 200. Cash in hand at cash at bank is 10,000. So overall the balance sheet is tally about 2,81,000. That is the apartment and meals department balance sheet is 2,81,000. Thank you. Happy learning.